Good morning and welcome to a Monday morning. Let's take a look at the markets. Overnight, we had, actually, when I looked at it last night, the E-minis were down like 40, and I was like, whoa, VIX was up 2. Of course, the VIX kind of has looked sluggish the last couple weeks as we've noticed a precipitous move down in the VIX, and that mostly, as most people are saying, would be due to the fact that the market just hasn't been moving around as much as it was at the beginning of this crisis. So we talk about themes coming into the trading day, and today, what would you call the theme? For me, it would be back to just what we're talking about right now, which is basically we were down a lot more than we are right now. Let's take a look at the action overnight in the E-minis. I use the E-minis as a representation of the entire marketplace, S&P 500. As we look at this chart, we see really the what's happened over the last long period of time with the sell-off and then kind of coming back a little bit for the market. Let's see if I can make this slightly smaller for a second here. That's a little bit kind of an extreme size. All right, and let's go just to the overnight action in the E-minis to see what we've got going on here. And as we look, we see the market really coming back here. Let's go to a 5-day to really get kind of a better idea. And so there we have it, the 5-day chart here. And I think it's going to be surprising to a lot of people that this market has continued to rally back. But in a way, it kind of seems like the market only really knows how to do one thing, which is to kind of slowly rally. So it's not a super huge surprise. I was watching on Twitter this morning, and there was, I think it was Julia Cordova was reposting somebody else's tweet. But what it was talking about was, is this market going to act like past markets after a big sell-off, or is it just going to kind of bounce right back? We know in the 87 crash, the market came back just that next day and a lot. And I really believe that these markets really only know how to do one thing, which is start to go back into rally mode at some point. We can tell from the market activity, kind of the major part of the crisis for the market ended like a week ago. Now, certainly it doesn't mean it's all clear and things are just going to go straight up. I don't know what the market's going to do right now any more than I did a week ago. However, it leaves us in a quandary of what do we do for our positions? Is the short vol trade still viable right now? I put that down as a quote in advertising this video. And really that speaks to the fact that we have been in backwardation for a long time. Now, if you're new to the VIX, you might not be familiar with backwardation and contango. However, the thing that makes the shorting VIX ETPs, UVXY, TVIX, VXX, so attractive is the benefits of contango at decaying these products, okay? So when the term structure's in contango, these products decay over time, and that's what makes them go straight down. If we look at a chart of any one of these products, pick your product. Let's look at VXX, for example, here. And, people know this already, but VXX, if you look at a chart, you're going to see it moving down over time, and that's due to contango. Well, now the market has been in backwardation for over 40 days. We don't have the effects of contango. So does it make sense to be short this stuff without that such crucial helping hand? You could call it the edge of contango. And, I would argue that it is, because we are still in an elevated area and there is pressure to the downside. Now, we talk about the term structure, and let's pull the term structure up for a second here. We talk about the term structure all the time as not being predictive, right? The term structure just tells you where we are, what potential we have as far as the short vol trade. But there's different ways of looking at this. As we look at the term structure here, and we go out in time, you can see the VIX spot here at the top is higher than the futures. That's not normal. That's called an inverted chart. We can see that the April future is higher than the May future. That means we're in backwardation. If you look at the bottom here, you can see it says 10%. That's 10% per month that this stuff is being pulled upward. That's not a normal situation. Now, if we think about what do futures mean, and I was having this discussion with actually my father about, what's a future and what does it actually represent? If you buy an S&P future that, has a date of August, what does that mean? Well, let's talk about VIX futures. So this is a traded estimation of where the VIX will be at a certain time, right? So when we look out and we see all the futures lower than the VIX right now, then although the term structure is not predictive, if you use this to predict, it is saying that the futures will be lower every month moving out than they are now. And usually when we have a term structure which is in a quote-unquote normal shape, the futures are lined up and higher as you move out in time. And that speaks to the fact that the farther you go out in time, the more chance there is of stuff happening, volatile events happening, some sort of black swan event happening or something happening to move the markets around. And before all of this crisis, the October future was much higher than the rest of the futures because the election was the big unknown in the future right now. And you can see a teeny dimple in the October future right now, but nothing like it was before. So this, in a very real way, when you look at this inverted structure now under normal times with an upward sloping curve, this could be said to be not predictive. But I would make a case right now that what this term structure tells us is that an average long-term volatility, an average long-term VIX is at a spot lower than right now. And this is showing right now an average long-term VIX being 28. Now, 3 days ago it might have been 30. So is this just pegging exactly where the long-term is for the VIX? Not necessarily, but the takeaway here is that long term, the VIX has an average lower than it is now. And so normal times, when we're in contango, the case for shorting volatility is that contango is decaying these products. Right now, the case for short volatility is we are far below the average VIX. So it's the VIX reverting to its average that makes the case to be short these products right now. And really, when we've been in this sharp period of backwardation, right now we're still in backwardation, and that puts pressure to the upside. It helps the case for long volatility. But always when we're in backwardation, we have to take into account the fact that the VIX is in a spike and it will return to a non-spike condition at some point. One of the things that makes the VIX easier to trade than other products is that we know the VIX just oscillates in a range. It's not like you have a stock like Apple or something where like it can keep going up, it splits again, goes up, goes sideways, can do all these different things. No, the VIX kind of stays in a predictable range, right? Now, it was kind of a wild ride for a little bit. However, we still know that the VIX isn't going to like take out 85 and go to 200. It's not going to split to the upside or something like that. We know that it stays in a range, and it's pretty likely that we don't break 85 again. But if we do break 85, it's not like this thing is going to go way higher or stay higher for a long time. We know that the VIX kind of just oscillates. So if I show a chart here for 3 years, still this event, it eclipses every other event in the VIX that has happened. But it appears highly likely that we are going to return to some sort of lower level from here as everything sort of calms down in the marketplace and as they get more of a handle on the crisis. A month ago, we really didn't know what we were dealing with. We were kind of bracing for impact in the U.S. for this this virus crisis. Now all of a sudden we're at a spot where they're saying, well, maybe the worst is over for the hot spots of New York, etc. And we don't know the economic damage from this. Obviously, there have been many articles that have come out saying that the actual economy damages of an event like this are not seen right away, and that we could expect to see things much worse as the effects of this slowly trickle through the economy and trickle down through all the businesses and whatnot. There are some pessimistic articles like that. There's also optimistic articles out there saying, well, the estimates of how many people would be hospitalized, how many people would die, were much higher than actual reality. And so there certainly is uncertainty out there. However, we're in a more certain spot now than we were a month ago. And you can really see that reflected in the VIX as the VIX has come in a whole lot. I did talk a little bit about how Theotrade, last week they were betting, we're going to see the VIX take out the highs. And anything could happen, of course, but there seems to be enormous pressure now to the downside in the VIX just because of the fact that we have more certainty in the world than we did a couple weeks ago. It's hard to imagine a more volatile, more scary, more uncertain time than we were facing a couple weeks ago, right before really the virus started to explode in the U.S. And as I said, things can certainly get worse from here, but that initial shock, uncertainty, a change in people's understanding of their life and their place in the universe, it doesn't seem like we're going to reach a spot higher than that soon. And I can sit here and say, it's obvious that we've reached a high in vol, and that's not going to happen. And everybody should have known that was a high with 2020 hindsight. And that's not the point I'm really trying to make here. It's much harder in the moment to figure out what's happening, and we may look back now and say, wow, this was a great buying opportunity for volatility right here. However, remember, when you're buying volatility, you're buying options in the SPX, and prices might go higher, but does that mean that it was the right move to own SPX options at a high level? Could you really finance that position if you owned it? So, for example, what would it look like to buy SPX options at a high volatility level, and how would you make money on that position? Well, if you bought just a call or a put, then you're making a directional bet, and not only do you need to be right that in the fact that stuff's moving, but you have to be right in direction as well. Conversely, you could do something like buy strangles or straddles, buy a little bit of options in either direction, but you then would have to make the decision and be correct in when you got out of that position at a profit, and picking your points to get out of that position. So it becomes a tricky game owning this options premium, and it's such a typical thing where, like, when nobody was willing to sell any options in the SPX and markets were so thin and SPX option prices were so high, it seemed like they were a buy. And now that stuff has come in a little bit, it seems obvious that you would want to sell them at those higher prices. So it's a little bit harder actually judging the market right when you're in the middle of things. Let's take a look for a second at oil just for a moment, because it's intriguing to me that oil has gotten so low. There was news over the weekend that they might be making a deal to cut back production. But we've continued to see this low price. We did get some sort of spike last week. I know volatility has come in on these products. And I feel that this is going to move higher from here. I just don't know when, and I don't know if it's the best source of taking your buying power and putting it in being long one of these oil ETPs or not. And when we check gold here, also gold has made a huge move up, and I think a lot of this has to do with just with the fact that with government spending all this money on handing out money to the public, that in people's minds is going to make the currency less valuable, and thus in my mind, once again, I've said this before, but in my mind, once again, gold does not change its value. It's just that the number of dollars needed to purchase that value moves around based on how much each dollar is worth. So when you see gold moving higher than this, it doesn't mean gold, in my mind, I like to look at it as, it doesn't mean that gold has become more valuable. It just means that the dollar buys each dollar buys less right now. And I'm not trying to be pessimistic with that. I'm just trying to look at it in the terms of gold as a store of value. And in a sense, unless you are extremely lucky or extremely good at trading gold, gold is probably not going to be the place where you make your fortune in the world. However, once you have accumulated some money, it might be a spot to park some of that money over a longer term period, because gold's value seems to stay constant over long periods of time. I want to suggest a channel to you folks to check out that's, I don't think I've talked about it on here before, but it's called the Junius Malby channel. Hold on one second here. And you guys might want to check it out. He talks a lot about economic philosophy, about owning precious metals and what they mean, and a whole bunch of interesting stuff. I don't agree with all his views, but check out the Junius Malby channel on YouTube. I've been following him for quite some time. I was into coin collecting and sort of gold hoarding and silver and these sort of things at one point. Interesting person to check out, I would recommend. So as we go in today, let's take a quick look at market headlines, and then I will let you get on with your day here. The battle to reopen. So, there's certainly been, let's see, headlines. Fauci downloads on Trump. I don't know if you folks have been following the whole thing with the aircraft carrier, with the people getting sick. I was watching those nighttime press things with the president and everybody for a while last week, but I've kind of given up on it. It seems like it's always the same at this point, so I haven't been watching that stuff as much as before. Let's see if I can go here to the chat for a second. We'll take a look at that before I end things here. Yeah, it's fun having people on the show, but we don't get to talk about like our core focuses when we have guests on the show. So that's why I like to get back to just being with you here myself sometimes. So let's see. Morning all. Hello, Oliver Rios. Hello, Brent. Thank you, Brent, for your support. Always appreciated. As well as Spencer for your support. So it looks like we are coming into the open here, rallying back almost to unchanged. You see the VIX up a little bit right now. We could attribute that a little bit, though, to weekend effect, that being just we see this happen a whole lot where Friday afternoon things seem cheaper than they quote-unquote should be, and Monday morning they seem a little bit more expensive. This just due to a sort of tracking error with the VIX formula, a 5-day formula and a 7-day work week type thing, and also even more due to the fact that on Friday afternoons, people who are trading the SPX options take that stuff down. They take the prices down a little bit. They take the decay out for the weekend. And remember, we had a 3-day weekend. So prices on Thursday were a little discounted. Now comes Monday, they bring those prices back up to a different level. So I would anticipate if the E-minis, if the market stays kind of unched, I would anticipate that VIX up a point, kind of fading back down. Let's look forward to us actually coming out of backwardation here. I feel as though the VIX term structure wants to come back into contango. It's always kind of heading that way. And so I think we have a good chance in the next 2 weeks to actually emerge out of backwardation. However, that doesn't mean that we're going to be in some sort of steep contango where it has a huge effect on things. It might be a while before we actually have a very sharp contango. However, all of this volatility should set us up for a nice ride to the downside. And I, for one, am putting positions on in VXX, looking a little bit farther out in time. Let's look at that really quickly here because I know I'm going a little long here. But let's look at VXX just for a second. And let me just show you what I'm looking at. And essentially, I'm just going out a few months and putting positions on. I don't want to be too aggressive. Let's see. So right now, I have a pretty aggressive position on in VXX. This is just kind of a play small position, but let me show you what I'm doing here. I have in July, 95 days out, I am along the 36-32 put spread. So if we look at VXX chart here, so it's about 100 days out, so 3 months out. I'm looking for a continuation kind of back towards the norm with VXX trending lower over time. Now, it's perfectly possible that the VIX moves down a little bit more and then just kind of stays in an area, and the futures kind of arrange themselves in contango around that. So it's not necessary that the VIX has to move lower for us to arrange back into a contango situation over time. I do anticipating it moving a little lower over the next month or two. If you put a gun to my head, I would guess that we get back to kind of a 30 level and the futures arrange themselves in contango around that. Hello, David Modell. Wow, I have all these supporters on this morning cheering me on. That's a great feeling. I know YouTube has been a good spot lately because people don't have much to do, so they sit around and watch YouTube. But I do have a good interview coming on this week. Best of luck to everybody as we enter the work week here. But yeah, I think this is a good spot farther out in time to start looking at and crafting some short vol positions moving forward because I do anticipate this market. It just feels like it just wants to go back into that slow rally mode at some point because people just don't know any different over time, it seems, than getting, and everything seems to be constructed for us to go back into a slow rally mode. And, it wouldn't be the most surprising thing in the world if some people take some of these checks that they're getting from the government and maybe buy a couple stocks if they've got some extra money. It's not everybody that's desperately trying to pay their bills and all that. There are some people who, they're on unemployment or they're set up in a way that they have the ability to take at least some of the money from these government checks and put it back in the market. So not so surprising to me if we kind of just move into the slow rally thing again. All right, folks, have a great day. Check out Brent's stuff. Check out Dave's stuff. Hey, what's up, Marcella? It's great to see all my buddies on here. What's up, Spencer? Hey, Oliver. I'll see you guys soon. We're back in the mode of videos every day this week, and good luck in the markets. Thanks for watching. See you next time. You're watching Famous Dave.